Hello, everyone. Welcome and thank you for joining us for today's webinar, The Mosaic Company Case Study, Business as Usual Creates Overpayments, brought to you by IOFM and sponsored by apexanalytix. We have just a few housekeeping notes to go over before we officially get started today. If you need any technical assistance, we first recommend refreshing your browser. If you continue to have technical questions or issues using the On24 platform, please use the Q&A box and we will respond as soon as we can. There will be no call-in number for today's session. To connect, you need to have access to either a computer, tablet, or cell phone audio. Everyone has automatically been muted today. So that you don't miss any shared content or an opportunity to share valued feedback with us, we recommend you enable pop-ups within your browser. If you happen to get disconnected at any time, you can log on again using the instructions provided in your webinar confirmation email. If you continue to have trouble, please email webinars@iofm.com and we will respond as soon as we can. For your convenience, everything in the webinar console is fully customizable, so you can move things around, resize the windows, and even turn on captions for this event. At the bottom of your console, you will find a resources box where you can download the slides as well as any additional content for today's presentation. Be prepared to answer 2 polling questions during the webinar. The polls will appear in the slides window during the presentation. Please choose from the multiple choice answers and hit submit. We would love to have your participation and insight today. And you can ask questions at any time during the presentation by submitting them through the Q&A box. We'll do our best to leave time at the end of the session to answer as many questions as time allows. And finally, this webinar will be recorded and you will receive a thank you email with the on-demand materials within 2 business days. And with all of that out of the way, I would like to introduce our speakers for today. We will hear from Laureen Stephens, Accounts Payable Manager, EBS/North America Shared Services at the Mosaic Company. Laureen has 30-plus years of management experience ranging in various fields such as medical, retail, and banking. She is from Bloomington, Minnesota, but now lives in the sunny state of Florida. She sings in her choir at church as well as in a woman's trio ensemble and has traveled with both in ministry. Laureen has 2 daughters who are both married. She is blessed with 3 wonderful grandchildren who adoringly call her Lala. And we will also hear from Pete Erdner. As Vice President of Commercial Audit Operations, Pete leads the apexanalytix Commercial Audit Division and works directly with clients on strategic client audits. His team is responsible for the oversight, management, and client satisfaction of commercial audit engagements. His goals are to ensure audits are completed timely, that they meet or exceed revenue expectations and performance objectives, and they deliver client value in recovered monies and enhanced internal controls. Pete has been in operations for over 24 years, the past 20 in management. Prior to joining Apex, Pete's career experience includes public accounting, tax preparation, and auditing. Pete holds a BA in corporate communications with a business administration minor from Elon University. And Pete is also a certified public accountant and a member of the AICPA and CACPA IIA. And last but certainly not least, we will hear from Mark Brousseau, president of Brousseau and Associates. Over the past 30 years, Mark Brousseau has established himself as a thought leader on accounts payable, accounts receivable, payments, and document automation. A popular speaker at industry conferences and on webinars and podcasts, Brousseau advises prominent end users and solutions and services providers on how to use automation to improve document and payments-driven business processes. Brousseau has chaired numerous educational conferences and has served on several industry committees and boards. He resides in Center City, Philadelphia, with his wife and 3 sons. And at this time, I would like to welcome our speakers and hand the webinar over to Pete. Welcome, Pete.
Thank you, Kelsey. First of all, I must apologize for the little bit of false advertising with my biopic. It's past due time to get that updated. Here's what we're going to talk about today is how errors occur in the normal course of your business, how Mosaic used to work internally to find those errors and why they decided to engage Apex to assist with that, what kind of staff and time commitment it takes to perform a recovery audit, and also an explanation of the recovery audit process and some expectations of what you would expect to find in average recoveries. And with that, I will turn it over to Laureen to kick off the review.
So, first of all, let me tell you a little bit about Mosaic itself. Mosaic is a Fortune 500 company, and we serve around 40 countries, and we have about 13,000 employees. We are the top producer and marketer of concentrated phosphate and potash. So right now we currently process, I would say, right around 60 to 80,000 invoices a month through the AP department. And of course, you all know that with this, you can have situations of overpayment, underpayments, items that have been returned, credits not processed. We have control over our own things, but we don't have control over what the suppliers do on their side. So what we did is we reached out to Apex to help us with our audit recovery in order to help find some of these issues. Pete, did you want to talk about this slide?
Oh, I'm sorry. Yeah, with the errors occur. So some of the errors could vary by industry, but some of the examples are could be the tonnage issues, pricing, PO type of issues, return merchandise not handled correctly, material PO issues, service PO issues. They vary by industry, but really larger message is that in-time transactions do not flow through the process correctly. It can lead to duplicate payments or cause credits to be missed.
Which we're seeing. We saw a lot of that. Some of these, like I said, are on the supplier side, and we don't have notice of it until somebody gets in there and starts digging and looking for it.
Example of the from our management assessment report that Laureen just spoke about is the return merchandise credit. So this is an example from a report that we issued to all of our clients, and we list the reason for the credit to happen, and also give some of the detail like the credit memo. And really, what we want to do is provide the details to companies like Mosaic to help you really understand the root cause of the issue, or if it's a specific supplier as well that's causing the issue, to allow you to take corrective action. The ultimate goal of the audit is not necessarily to bring the funds back, but to identify what's causing the issues so you can put controls in place to prevent them going forward.
Yep, and that's what we were able to see. Daniel, who was our lead auditor, after our first recovery project, he came to the office and provided to us a presentation of exactly everything that they found, down to the quantity and the quality and the reason for each and every single item that they found, the claim that they submitted. It helped us to get a better view of understanding where things were coming from. A lot of people think sometimes recovery is an AP issue where it's a duplicate invoice that was processed or something, but a lot of this time, going back to that previous slide, you're right, it's a tonnage issue, it's a pricing issue, it's returns. So we were able to capture that information and then go to procurement or go to our distribution area and say, here's what we're finding. This is what they determined. And instead of putting just a Band-Aid on it, we were able to fix the issue to prevent it from happening going forward. It's not just a statement reconciliation process. It's really providing a deeper insight into all of our processes.
And that brings us to our first poll question, which is now displayed on your screen. We want to know whether you've done an internal or third-party recovery audit or not. Which of these business processes do you know or suspect could cause potential overpayments? Whether you've done an internal or third-party recovery audit or not, which of these business processes do you know or suspect could cause potential overpayments? Do you believe it could be returns, receiving errors, duplicate overrides of ERP system controls, invoice coding errors, paying out of multiple systems or multiple locations, pricing errors, or potential fraud, whether that's internal or external? Click all that apply and tell us what you believe could be the cause of potential overpayments. Pete, when you're talking to prospects, what is it that they often are calling you for? What do they often believe is the cause of overpayments? And conversely, what are they often most surprised is the real cause of overpayments? I think we've lost Pete. So Laureen, when you started this process out, what did you believe was going to be the most likely cause of potential overpayments?
A duplicate payment. And because we do have multiple systems, it is a possibility that an invoice goes through one system and then it goes through another system. But we were finding out it's even more than that. It is the pricing errors. It is the receiving errors. All of those credit memos that were never processed, the returns that were never processed. So, anybody knows that who has multiple systems out there, you're going to have issues, and you can't find them yourself. So this was a way that we could find it for us.
Is your sense, Laureen, that duplicate payments are becoming more prevalent these days now that it's easier for suppliers to send invoices via, say, email?
It is. We have duplicate payment checks in place to prevent that, but it has to be, match to match, basically. But if you send in an invoice of 1, 2, 3, 4, and you send another invoice of 1, 2, 3, 4, 5, 6, but it's the same invoice, it's going to get processed. It's not going to get picked up. So we've seen that in fraud. We've seen that in issues where people try to get by with it. Our checks in place do help, but they're not 100% guaranteed. So yeah, it's a tricky business.
At the end of your first go round with an audit recovery, what surprised you the most in terms of overpayments? What was the, oh my gosh, I never thought it'd be that big?
For us, it was more of the receiving issues. And
Talk to me about that.
It wasn't because they were doing errors. It was just because, things were being received or not received, and then the communication wasn't getting back to the supplier properly, or the supplier would bill it, but we just didn't receive that same amount. It was a timing issue. And that created us either overpaying or underpaying on certain things because of the timing issue. So it was found with the recovery audit. And I think the big aha moment was, it's not all AP. And I think that was kind of like the pat on our back where I could go, look, it's not just an AP issue, it's a company-wide issue. And we have taken that company-wide and shared it and explained it. And so, we all know it, it's always AP's fault. So, so this time it was, it was a good aha moment for everybody.
Yeah. Hey, Pete, how have the nature of overpayments changed over the past several years as we've shifted to more of a email versus a paper invoice submission environment?
Great question. Hopefully you can hear me a little bit better now.
We can hear you great now, Pete.
Oh, good, perfect. Yeah, as you kind of mentioned earlier, I've been doing this for a long time. And when I first started in this industry 20 years ago, 20 plus years ago, there was a team of processors keying off of paper invoices, and you saw a lot of keying errors, and you tried to follow invoice coding standards and things like that. That's changed, and now a lot of that's pushed back out onto the supplier, and it's really led to different types of errors. So a lot of what we're seeing now are suppliers are resubmitting invoices when maybe they're not paid when they expect to get paid. So say they're expected on 30-day terms, but you have them on 60-day terms. Day 40, they're going to resubmit that invoice. The system's going to tell them that this invoice already exists, so they're going to add an alpha character to the end of it to get it to be processed. And a lot of times the date might be different as well. They're not using the true invoice date anymore. They're going to use the date of when they're resubmitting that invoice. So it's multiple things that can go wrong to cause those issues. So we kind of have to train and look for those duplicates a little bit different now, knowing that there's different ways for the invoice to be processed. So another good key would be if there's something we see is processed through an upload and also processed manually, that looks like it's crossed over. So it's multiple methods, and it kind of changed the from the keying errors to more on the supplier's input errors.
What's the thing that most surprises your clients after they've done their first audit recovery, Pete? What's the aha for them, as Laureen referred to it?
I think it is what Laureen said. A lot of times what we're finding is not really what you consider true AP errors. What we find on the duplicate payment side that AP controls is typically about 20% of the findings. Most of what we find is more procurement related issues related with POs being updated, related with how return merchandise is handled, pricing adjustments, or it's things on the supplier side where maybe they're not reconciling their books accurately, or they're resubmitting items because they're not accounting for it correctly. So a lot of it's not really as much under the AP control, but you involve your procurement peers to help those issues going forward.
Pete, we know that fraud is a front of mind issue for more AP leaders these days. Heck, it's a top of mind issue for more CFOs these days. Yeah. How are we seeing that showing up in the audit recovery services you're providing? Are you finding more of it these days?
We find a lot of, I guess, what we would call lead indicators for it. If it does turn into a fraudulent issue, usually we turn those items over to our clients to allow them to do the internal investigations that need to happen. So a lot of times that loop doesn't get closed back to Apex to let us know the findings of it, but we provide them the input of, hey, this looks fraudulent. And we can do, once we identify maybe something through the recovery audit, we can have some tools to do a deeper dive on potential fraudulent looking activity based on invoicing characteristics, supplier characteristics. So there's a lot of different controls that we can do as well to kind of help supplement those potential fraudulent items as well.
We asked our attendees whether you've done an internal or third-party recovery audit or not. Which of these business processes do you know or do you suspect could cause potential overpayments? 55% of our attendees believe duplicate overrides of ERP system controls is a big cause of potential overpayments. Another 55% of our attendees identified paying out of multiple systems or multiple locations, exactly what Laureen was describing. 43% of our attendees said invoice coding errors. More on that in just a moment. 36% said receiving errors. 35% said returns. 40% said pricing errors. And yeah, look at that, Pete, just as we were discussing, 43% said potential fraud. So Pete, 55% said paying out of multiple systems. Another 55% said duplicate overrides of ERP system controls. That doesn't surprise you at all, does it?
No. Anytime there's going to be the controls that are built into your ERP. If you're paying out on multiple systems, those controls aren't going to do you any good. But also there is we do see a lot of times that override process where someone wants to just approve this payment. They've got a supplier or someone kind of talking in their ear. I need this invoice paid. It's past due. So maybe some of that due diligence doesn't happen, or it could be based on materiality as well. maybe there's some materiality thresholds, so things aren't looked at as closely. But definitely some of those, either the overrides or definitely going across the systems, are going to expose you to potential duplicates.
At the risk of sounding like I'm sucking up to our audience, I want to point out that oftentimes AP gets blamed blanket for these types of issues. Pete, are they unavoidable? I mean, is there some element of this that you just can't stop, these duplicate overrides and issues that come out of paying out of multiple systems or multiple locations?
Exactly, yeah. If you're going to try to be 100% perfect and everything, you're going to come to a halt. You won't ever get anything processed. So some of this is, what we say is just the cost of doing business. And it's good to put in perspective, and we do this in our audit reports. We're finding a small fraction of errors. Most of 99.9% of what you're doing is going correctly. We're finding those small ones that don't work accurately. And that's what companies like Apex exist. It's more cost beneficial to really use us to kind of come in and capture those small ones that fall through the crack that don't happen normally, and bring those back to you, and then give you the feedback on how maybe you can tighten up the controls a little bit more and block even more of them. But to try to stop everything, you're just going to come to a halt and won't get anything processed.
I have this theory, Pete, that in our work days that are so jam-packed nowadays, that invoice coding errors are becoming more prevalent for organizations that haven't automated the invoice processing cycle. Am I on the right track there? Is this becoming a bigger deal these days?
It is, and it is, and really it's because there's multiple ways for invoices to get processed. So the days of having your sheet of coding standards are kind of bygone. So now it's more that we recommend more of the key it as you see it kind of approach. To make sure that if you are keying something, you're going to at least match what the supplier is seeing as well, versus stripping out characters and things like that. But then it also can lead to problems with some of your matching processes. So it's tricky. It's no magic bullet that's going to fix all of it.
Are invoice coding errors one of your biggest frustrations, Laureen? They've got to drive an AP leader like you crazy, no?
Our system is kind of unique, which I like, because AP has gotten out of the coding business. Our invoices, smart. Yeah, our invoices are going straight to the specific coder. The owner of that invoice, basically whoever submits it, is the one who codes it. And then they determine who is going to be the approver for it, and it follows a table of authority and goes through the system. So I would say the coding issues are not the biggest issue for us. I would say it's more of the multiple systems right now that we're dealing with, and the suppliers themselves and how they then apply our money versus how we send it out. And then they come back and say, this invoice wasn't paid. No, we have proof that it was paid. So it's the not knowing on the other side that's causing a lot of the confusion on our side, because we don't know what they're doing or how they're applying our money. That's
right. So talk to me about why it is you shifted to this new approach to trying to uncover these issues.
So before we used apexanalytix on this, we had a team that was doing the statement reconciliation on basic all in-house. And we were going off of their statement and going and taking what we had in our system, and then the communication going back and forth. It was very, very time consuming. It was just not the main function of AP. So we wanted to find a way that we could get a third party to do it for us, so I could then start paying our invoices on time and be able to really focus on what we need to do and paying our suppliers. The wonderful thing about this is we no longer we're in the statement business. So we were able to cease the statements coming in. We were able to stop having them come to our door, and Apex went ahead and they contacted everybody. They got the statements on our behalf, and they started doing that research for us. So it saved us so much time on our side. We eliminated some contractors in order to support the statement reconciliation process. Instead, we were able then to take the full-time people and put them into positions that fit them better. It was just a better fit for our department.
Laureen, who led the charge here? Was it you? Was it someone above you? Who said enough is enough?
Well, it's a little bit of both. I just became the manager a little over 2 years ago. So our first Apex Analytic recovery project was when I was a supervisor in AP and was assisting with that. And then I became the manager and then continued it from there. So it was a group effort to determine we needed to bring this on, and it was a smart decision.
Yeah, talk to me about moving to that shared services model as part of this exercise. How did that factor into everything?
We became North America Shared Service Center right around 2 years ago. And we were functionalized within that area. We were bringing on more responsibilities. And because of that, we had to then break up the department to make sure we fit all of these new responsibilities. So we just knew statement reconciliation was not one of them. So bringing on Apex to do it was the best decision.
Yeah. Hey, Pete, does moving to a shared services model make it more incumbent to do a third-party recovery audit? I mean, is it even harder to do, statement reconciliation when you're a shared services organization?
Yeah, and it definitely is, and it's something that we see across our clients where it's tough because it's not your core business, and it sounds a lot easier than it is. But we have a dedicated team that does this statement outreach. We use a lot of predictive analytics to help us know which suppliers we typically expect to see issues with based on our other audits. So, the 10,000 suppliers on your vendor master, there's not going to be issues with every one of them. It's going to be a small percentage of those vendors. So we have some analytics to help us know which suppliers to reach out to. Another thing actually that we find with our clients is you might not have the most up-to-date contact information either. That might be updated when you added them through your vendor master years ago, but it's not who the right person is to reach out to now. And through us contacting a lot of these same suppliers through our other audits, we can kind of leverage some of that contact information that we learned from other audits to say, all right, we know this is the right person because we just talked to them last week on another audit. So it helps us be more efficient in knowing who to target and communicate with suppliers.
Pete, it sounds to me like Laureen was enthusiastic to do this. Maybe I'm overstating a bit, Laureen, but indulge me for a moment. But Pete, somebody listening in right now might have a little more trepidation. They might say, well, I don't know what we're going to find here. Assuage those fears.
I mean, in my 24 years, we've never done an audit where we haven't found anything. So there's always going to be something. But worst case scenario, if you don't find anything, then you can say, hey, our controls are working right. And the way our model is, you don't owe us anything. We only get paid for performance. So based on the findings that we bring back to you is how we get compensated. So if we do go through the process and we don't find anything, or we find minimal, it's not going to cost you, and you're going to get that validation to know that your controls are working accurately. But I would dare say that there's always going to be something out there.
How do I convince a skeptical senior manager? Laureen had no problem with that, but what if senior management isn't so sure that this is something you should be spending time on? What's the talk track to win them over to this idea?
I think part of it is we're going to bring money's back to you, and we can show some statistics by industry that the value that we expect to bring back per audit. But also it's going to be not just that value, but going into if there are control weaknesses that you may not even be aware of, we can help identify those for you and help you be able to correct those. And sometimes it's not a necessarily a system issue or an ERP issue. It might be a supplier issue. And we do see that from time to time as well, where there's a certain supplier based on how they're invoicing you, communicating with you, that's causing issues. One example that we broke down before ended up being it was a catalog update wasn't getting updated. So they're paying an old price because that feed is broken. So everybody thought they were doing the right thing, but they're continuing leading to overpayments until we were able to dig into that cause. So it helps to identify something that might be more specific even to a supplier than something systematic overall.
All right,
and again,
Laureen,
if we don't find anything, we don't get paid.
Talk to me about the visibility you now get out of this.
So it kind of goes back to what we already talked about. We were able to see exactly what and how and why they're filing these claims and able to recover this money for us. So one of the first reviews or recoveries that we did with Apex, they did not have the dashboard. And they then on the second one created the dashboard, and it was just, you know, angels singing. And as soon as I saw it, it was wonderful. Everything is like literally at my fingertips. And if I ever get a question, hey, how's the recovery project going? I can go straight to the dashboard. I can pull it up and I say, well, right now we have finalized claims at this. They're working on this. And here's our dollar amount. And this is how much we've paid them so far. And this is how much we've recovered. And here are the reasons why. And it doesn't disappear. So what's nice is we've started our third recovery with them now, I believe. And I can still go in and pull up all the different recoveries so I can see the progress we have done since then. And the number is getting less because we've learned our lessons, and we've taken those that they brought to us and they've shown us, made those corrections to prevent it in the future. So we're not collecting as much anymore, but going back to what Pete said, there's never ever going to be a no recovery situation. You're still going to find things are still going to slip through. And again, it's not just necessarily on your side, it could be on the supplier side. So all of this is available for us to see. And again, I can pull it up whenever I want because it's web-based, and I can just go in and research it, and I use it. I use it all the time.
Are you the only one going into this dashboard, or are you directing your colleagues over at procurement or elsewhere to do that as well? Talk to me about that.
Yeah, procurement does not have it, but AP does have it. So we were able to provide the information to procurement with it, and I have done some governance meetings with it to show them what we have collected and why. But the AP department uses it. My supervisors use it. So when we do file our claims, we're able to go in and check off, yes, they received this money, we did get this money, they sent it to us, and we can do our checks and balances, our tick and ties, and it's available to the AP team to use, and it really helps. We meet with Apex once a week if we need to. Right now we're on a holiday break. It's kind of, if you need us, call us. We did provide them with laptops so that they have access to our system as a read only, so they don't have to keep calling us and going, hey, can you look this up? Hey, can you look this up? So they have access to that. And then they just took over. And it was, they, you know, like I said, they requested the statements, and we just started getting money back in.
Pete, it seems to me this type of visibility is what really, where the rubber really hits the road here. Talk to me about how organizations can use these insights to drive improvements in their department on an ongoing basis.
Yeah, and again, it kind of, we break it down into two different areas that you can really lean into. One is we list the top recoveries by the supplier. So again, sometimes it is just a supplier-centric issue that's causing some of the opportunities. So it's a good time to partner, like Laureen said, partner maybe with your procurement colleagues who maybe own that supplier relationship, and understand, you know, what is it that's causing these errors to happen, and you know, why aren't they being communicated back to you? A lot of times we do get clients ask that question to us a lot of times. Why aren't the suppliers telling us that these items are out here without us having to reach out to? And sometimes the supplier doesn't even know who to reach out to, or now that they're up on an upload or a web system or an Ariba type platform or something, they don't know how to pass those credits back to you. So it's a good learning opportunity possibly to work with your supplier to say, hey, if there's something that does go wrong, here's how to communicate with us, or here's what's causing this to happen. Can we help us so we can smooth this process out? So sometimes it's more of a supplier specific, or again, it can be that root cause thing, more of a systematic thing. It's you know, we find this duplicate payments due to multiple vendors on your vendor master, and you go through a vendor master cleanup process, getting rid of your duplicate vendors. You're going to help eliminate some of those duplicate payments that you're seeing. When you see those return merchandise, and we start to drill into it, we can see that most of those are coming from one specific plant or location that's maybe not following your controls on how returns are supposed to be processed. So it can lead to that insight to get down to the more actionable root cause to be able to put some corrections in place.
Laureen, when you first saw this dashboard, the first go around, were there a couple suppliers you had to sit down and have a firm conversation with? And how did that all go?
That's when I went to procurement.
Oh, that's when we get procurement involved. You're funny, Laureen. We'll only get them involved for the heavy lifting. Okay, I got
Talk
you.
to the suppliers. Yeah.
There were no angels singing that day. No.
No, because they have the relationship with the suppliers.
No,
the buyers are the ones. Oh yeah. So, you know, we were able to say we collected this, we collected that, and then they were able to have their little chats if there were tax issues, especially, or if there are POs that were set up with tax, without tax, and that was causing some of the recovery. That's when they were able to go back and talk to the suppliers, talk to the buyers, talk to the requesters, and make some of those changes.
That's good advice, everyone. Only get procurement involved when you've got something serious going on. So let's talk to me about what's going on now, Laureen. I heard angels singing earlier. So what is life like now?
So it's actually really smooth. We have the process down. Like I said, we meet with Apex. They send in the information. We have one person who's totally dedicated specifically to Apex as a contact person. So Apex can contact them. If they have a claim that comes in, it goes straight to that person. And then she takes that information, she verifies it and submits it, and we process it. The money comes in with the claim. We know we can do our reversals if we need to, or we can process whatever we need to in order to clean up the vendor account on the claim that they sent to us. It's very informational. It is not vague information. They definitely send in the detailed information that this goes to this invoice, this is the dollar amount, this is why. And it's no guessing game on our part on how to apply it. We know exactly with what they send in and how we can apply it. So it's becoming very smooth. I mean, it took us, you know, you're going to have those little issues in the very beginning, but once we got that down, we've got a process, and we work with them very well.
I reckon that's the question on the minds of a lot of people listening in. Man, this sounds awesome, right? A couple hours a week. At the beginning, what type of a time commitment would somebody need to make, Laureen, to get this rolling?
Well, you want to be able to assist in determining which suppliers they're going to go after. You're going to provide a letter. We provided a letter with my signature on it that they could then send out to the suppliers. Okay. You know, this day and abroad, they get letters. People are going to see an email and be like, oh, I'm not clicking on that. And they just delete it. So they want to see somebody they recognize and a name they recognize, and not just, this email that comes into their system. So we made sure that we had that covered with the letter, and then the email attachment with it. And they did all of the research. They sent everything out. We were there to help them if they couldn't get a hold of somebody. There were some suppliers that we said, no, don't go after them. We're going to, white glove them. So please don't touch them. They don't. So it was just a learning process in the very beginning. But I think maybe, you got to schedule some time with everything that, everything wonderful. You got to schedule some time to knock out all the kinks at first. But if you can do, I think maybe we put 10 hours the first week, if that, and then they took over and just be available to answer those questions, because we all know our suppliers are priority. We want to make sure that they're happy and we still get the products and we pay them timely. So Apex is very good with customer service, I will say. I've never had a complaint about they were rude or anything. They worked well with them. And I think the biggest thing was just that, is this from you? And yes, it's from me. Go ahead and open it. You're okay. But
it is legit. Yeah.
It is legit.
So Pete, talk to me about the process. How do we get to nirvana?
Yes. And again, it's a question we get a lot as well, is how much involvement is this going to be? How much of a time commitment is going to be, and things like that. So we really put together our audit methodology from the planning through the data gathering, through the audit process, through the wrap up, and it really highlighted your team's efforts. And as Laureen mentioned, some of that's going to be upfront as far as gathering the data, working with your IT team, and we have some scripts and things like that can help that process. Working with AP folks to make sure we understand that the process is, we understand how to access your systems. again, as Laureen mentioned, if we can get one of your laptops to access the system ourselves or through some sort of remote access, we try to be as self-sufficient as possible to remove that burden from your team as the audit progresses. So once we get up and going, it's going to be very limited, 1 to 2 hours every couple of weeks, just really reviewing claims and handling exceptions and things like that as we work through the audit process. We work with every ERP you can think of, large data sets and things like that. So we're used to this. We've got it pretty much down to a science at this point. Once we get going, we really are able to work independently. Another thing we can do at the beginning of the audit is based off of a list of your top suppliers, we can begin a kind of a quick start to the audit process so you can really start seeing recoveries quickly. Typically within the first 30 days, we can start to show you value from the audit process.
So when you look back over this, Laureen, what advice would you give your peers listening in today to help make this process as smooth as possible? What lessons learned can you share?
Be prepared to have and provide a good vendor list. Kind of scope through that vendor list yourself at first to see, yes, I want this person to go. No, I don't want this person to go. If you have ones that you currently struggle with, put them to the top of the list and have them go after them first and have them work on it. Because the biggest wonderful thing is to get that first check and start cleaning up the items. So if you can put that on one of your checklists and wow moments, hey, look what I just did, look what Apex just did for us, we just collected this dollar amount, it kind of sets the pace for the rest of the audit. So and have that dedicated person that they can go to that's available to answer those questions if they need be, if they're needing help with research, if they're needing help to set up the computers, or if you do give them a laptop, give them a dedicated person to go to. And we did that for the setting up of the laptops themselves, for any IT issues and assigning and access issues, and then the one person at AP just for the claims themselves.
Talk to me about putting together that vendor list, Laureen. Is that something you did involve procurement in to sort of understand where the potential landmines were?
Yes, we did. We requested their choice of who we should go and we should look at first also, and they gave that. And then after so many weeks, just recently, in fact, just last week, we sent it back and said, okay, provide us a list of the suppliers that you have not heard from, that you have not gotten a statement from, so that I can provide that to procurement, because they want to be able to say, no, it's okay. You can go ahead and send this. So the partnership is very important with you and your procurement team, and giving them updates of saying, first of all, I'm going to do this, so that they're not getting phone calls from their suppliers saying, who is this and why are they asking this? But they have the buy-in now, and they say, well, oh no, it's Apex, it's okay, it's true. And then after the fact, when they can say, did you get that email to resend in that statement? Just want to follow up on that. So they do have a buy-in on this too, because they've got product from them and they want to continue to get the product from them.
Yeah, and as I mentioned earlier, Pete, we know that the shift to remote working and the pandemic, that's created a lot of issues for organizations. Talk to me about the impact of all this disruption on payables and what it means to today's discussion.
Yeah, no, that's a great point. As we see that there's changes within AP departments, we typically see a spike with errors happening as they go through these system migrations or invoicing deployments or what have you. As there's any sort of a change to the process, we typically see those items spike. Then they will start to, as learning curve adjusts and people adapt to the systems, it will kind of come back down and start to normalize a little bit. But sometimes there's something systematic that happened during that maybe doesn't get adjusted. So, and there's issues keep happening. So it's really important to do an audit during or right after any major event like a ERP upgrade or invoicing deployment or something like that, to see if one is to capture those those errors that went out, but also to see if there is anything that's systematic that you still don't know about that's continuing to cause errors, so you can address that and don't carry those forward.
Yeah, I hear a lot of departments kind of hunker down, Pete, right? When they do these ERP migrations, they tend to not do anything from a technology or process improvement standpoint. What you're suggesting here is this is exactly the time that you should be taking a close look at the way you're doing things.
Really it is. And we understand that it's challenging to take another project on. That's why, again, it's important that at Apex, we try to do as much of the effort as we can ourselves. So it's important just so you learn from that, and that you're not continuing. You don't want to find out a year from now that there's just some basic system configuration that's causing issues to happen that wasn't tweaked right because you put up doing audit. And the other thing is as time goes by, time is really the enemy to the recoveries as well. Items tend to drop off and get harder to recover the farther you get from that transaction, due to the fact that that supplier, maybe you're not doing business with that supplier anymore. They may have ended up going out of business themselves, which we've unfortunately seen that a lot over the last couple of years. So getting closer to that transaction makes the recovery process a lot smoother as well.
So what's part of an audit recovery process, Pete? And what are some of the misperceptions about it?
Well, the accounts payable audit, when we say account AP audit for Apex, what we mean is a duplicate payment, erroneous payment review, where we're getting your accounts payable data and your transactional data, and we load it into our proprietary software, and it's going to run controls looking for potential duplicate payments. So that's one part of it. That's pretty straightforward. The supplier statement review, which we touched on a couple of times, where again we are soliciting AR statements from your suppliers, looking for credits that they have on their side that for whatever reason never made it back to you. So identifying those opportunities, and again, we'll find what's the root cause, why did it happen, and all that along with that as well. Another area that we haven't touched on really yet is a debit balance review, where the duplicate payments in this supplier statement are looking for items that you're not aware of. The debit balance is a little bit different in that it's credits that you are aware of, you have on your books, but for whatever reason, you're not able to process those. Maybe you've stopped doing business with that supplier and there's no activity taken again. So again, we can reach out to those same suppliers through that recovery process to try to bring those funds back for you as well.
Yeah. So talk to me about what else we can include as part of an audit recovery process.
Yeah, great. And some additional audits that we do, and the beauty of this is a lot of these audits utilize the same data set that we would use for the accounts payable audit. Our uncashed check review, or sometimes referred to as a pre-escheatment review. So looking for items that you can prevent them from being escheated to the state. Also a unclaimed property review, which is where your suppliers have escheated items to the state, and we would go through the state and bring those back to your team. A sales and use tax compliance review, making sure that the tax was applied correctly. Contract compliance review, which is basically looking to see if your terms and conditions of your contract is adhered to and paid correctly. Any of these audits can run in conjunction with your accounts payable audit, or they can be run as standalone projects. Sometimes these reviews may involve different departments within your organization as well, maybe your procurement or tax and things like that. You might be involved with some of these other audit services as well. The value delivered from these and all of our audit services really is going to be the incremental cash, the bringing the value back to you that you didn't know you were missing in the first place, bringing that money back. But then also, even more important, like we talked about, is the insights, the control. Are the things that you can do to tighten up some of these controls so they don't keep happening. And again, it's a slow risk. We only get paid for the value we deliver. So it's not that you have to have a budget line for these audits or anything like that. We get paid off of what we find the contingency based on what we're able to bring back for our clients.
Yeah. So what can we expect, Pete? What types of payback can we get on this?
Yeah, that's a great question. That's probably one of the ones we definitely get the most is what do we expect to get? Yeah, what do we expect to get out of this audit? We break it down by different industries because we do see that different industries have different complexities, which lead to different opportunities. This chart shows based on an annual averages of our audit based on industry, and this represents 4.5 trillion in spend that we've audited on an annual basis. Where we expect to see the audit findings fall. And these are the averages. These can fluctuate up and down based on how mature the audit process is, or based on if any of these other migrations and upgrades and things like that we've talked about have happened that may cause them to go up, or again, if it's more mature, maybe they're going down. Other things that can impact the findings of an audit or the frequency of the audit. How often are you doing audit? Are you doing them on an annual basis, or has it been a couple of years since you've done an audit? So there's opportunities there. Have there been any merger and acquisition things? So that's a lot of times what causes some of those multiple systems. So you're bringing in another company and they're on a different version of an ERP than you are. So it causes those cross-system items. Any offshoring, onshoring, turnover, or also something that people don't think about a lot of times is your suppliers are going through a lot of these same things themselves. So there might be issues on their side that they're dealing with that are causing issues on how they're applying or sending invoices and things like that they can lead to the opportunities. Just for our last audit for Mosaic, we audited. It was a couple-year audit, so it was a catch-up audit. It was about $19.5 billion in spend, and we recovered $1.8 million, which, as we look at these expectations, it falls within the expected range of what we expect to audit recover for them. One of the things to consider, though, is recommend doing an audit on an annual basis or even on a continuous basis, which is maybe we get data quarterly and we continue to audit closer to that transaction and allow you to take more real-time action on prevention and learning and plus getting those funds back and not waiting for them to age a year or whatever before you get the monies back. Part of the main reasons to doing that, as we touched on, is some of those suppliers, may end up going out of business. You're not working with them anymore. So staying close to that transaction allows you to make sure that you're able to secure that money back on your side.
Laureen, $1.8 million. You must have been a hero in the halls over at Mosaic.
It was a team effort, that's for sure.
I know you're probably working remotely these days, but if not, yeah. I hope you got a better parking spot.
Well, and the good thing about that too is, like Pete has been saying this whole time, their fee comes out of that. So, it's not like we had to come up with extra money to pay for this. It was, we got that 1.8, right, which we weren't expecting, and their fee comes out of that 1.8. So there really wasn't a budget that I had to set in order to do this. It was out of the money they collected.
Let's slide one more poll question in before we go to Q&A. We want to know, how recently have you performed a third-party AP recovery audit for duplicates and statement credits? How recently have you performed a third-party AP recovery audit for duplicates and statement credits? Have you done it within the last year? Have you done it within the last 2 years? Has it been more than 2 years ago? Or egads, have you never, ever, ever done one? Take a moment to respond to the poll question now displayed on your screen. I will discuss the results in just a moment. All right, Laureen, so what would be your single biggest piece of advice to someone who's listening in today and thinking, you know what, Laureen's talking sense, I might want to do a recovery audit? What would be your biggest piece of advice to these folks?
Talk to them. I mean, fine, do it. I mean, it's not going to hurt. To be honest, it's just not going to hurt you. If anything, it's going to help find issues that you didn't even know were there and fix them. So like we had talked about, our first audit was, a certain dollar amount, and it's getting less, but we're still recovering, but we're learning from every single one of them. So it's beneficial, and I would recommend it to anybody.
We asked our attendees, how recently have you performed a third-party AP recovery audit for duplicates and statement credits? About 1/3 of our attendees say they've done it within the last year. Bravo. 5% of you said it's been within the last 2 years. 1/4 of you said it's been more than 2 years ago. Look at this, though, Pete. This warms the cockles of your heart. 40% of our attendees say they've never, ever done an audit recovery. What would be your piece of advice to these 40% of folks who haven't done one yet, Pete?
Yeah, well, there are two things. One is, don't wait for the perfect time to do it, because there's probably never going to be a perfect time. You're always going to have some other things going on. You're always going to have other initiatives, other projects. So if you wait for the perfect time, it'll probably never happen, and those items are aging and you're losing opportunities. The other thing is, we actually done a benchmarking survey of clients that audit on different cycles. We find that for every year that you skip, you're losing 23% of those recoveries. So it's not that 23% you're going to catch it up on the next audit. That 23% is gone forever. And that goes to, again, some of the things I've talked about before. Their suppliers are out of business. You're not working with them anymore. Maybe they don't have the backup to support the claims or anything anymore. So every year that you skip an audit, you're going to see the recoveries decrease by 23%. So the sooner you do that, the sooner you can secure those funds. And again, it's we try to minimize the time, and it's going to be the insights that you get out of it is really what people rave about, and why they keep coming back and doing this year over year.
Let's dive into the Q&A portion of this webinar. If you haven't already submitted your questions for Laureen or Pete, or if you've thought of another question for Laureen or Pete, go ahead, use the Q&A tool on your screen to submit your question to me now. I've got a bunch of them in the queue, but we'll answer as many questions as time allows. Our first question up is from Vineet. Vineet wants to know, how do we process credit notes received from our suppliers? Do they go through the same process cycle as regular payable invoices submitted by suppliers? Are there any good practices in place to ensure these credit notes are rightly accounted and ensure cash flows are better managed? Pete?
Lorraine can probably definitely give her insight on it, but it's from our side, there's a couple of ways to answer that. Is if it's something that's like a current year transaction, or if it's with an open PO, try to put it back to the original transaction. Makes a lot of sense, and it's in this current budget year, and you can account for that. If it's something that's prior year, or maybe that PO has been closed or something like that, we do recommend maybe taking it to a higher level account that's set up just for the audit, that allows you to book those funds to. And then if you do want to disperse anything out to the proper business units or things like that, you can do it out of that account. And also, again, you can pay a fee out of that account as well. So we do recommend, especially for prior year items, maybe to put it to a higher level account and then move the money that way, versus trying to tie it back to a PO or something that may end up being closed.
Loreen, what advice would you give to Vineet about credit notes?
Really the same thing. We look at the year. If we're in 2023 and it's a credit for 2023, we're going to do it for 23. We want to make sure that it hits in the proper time frame. If it is something that's old, that's been sitting out there like one of those debit balances, consider this free money in a sense. So we can take that, put it to other operating income, or and then our other operating expense pays out the fees. So it all depends upon your company and how you handle what GL you want to put it to and how you want to handle the expense.
Laureen, Linda wants to know, did any of your suppliers place you on credit hold due to a recovery claim? How did you resolve that relationship issue?
They did not. We did not have, in fact, we had credit holds prior to the recovery issue. And after we had the recovery, we had no credit holds. It was the recovery audit was able to help us reconcile these statements that this supplier was showing that they did not have payments for certain invoices, but we were able to show, yes, we did. So they were able to do that reconciliation side so that we could take those holds off and then stay off.
Loreen, Leo, go ahead, Pete.
I was just real quick on that too, is I didn't really touch on our recovery process, but our team at Apex, we work directly with your suppliers to understand why these credits happened and to make sure that they agree with it. So we're not just taking items and throwing it and saying process this credit. We want to make sure that it's three-way compliance really on it. So the supplier agrees and understands and expects that credit to be processed as well. So there's no surprises to the suppliers during this audit process either.
I've got about 30 seconds. Laureen, Leo writes in about contract invoices. He says the volume is really high and very time consuming because vendors often send in their invoices without the PO number. Imagine that. And line item to take the money from. What can we do to make this process easier? Any advice for Leo here on dealing with contract invoices?
Wow. For our side, we immediately return it back and we say, we cannot process this without the PO itself. And we're based off of the receive date. That's when our terms start. So don't receive an invoice without a PO, because that's when it starts. If that PO is gone, we immediately return it back to them and they have to send it in correctly.
Fix it. Great advice. Laureen, Pete, thank you so much for an excellent presentation and for sharing your advice, your insights with us today. And thank all of you for taking time out of your busy days to join us. I know we did not get to all your questions. Pete or Laureen will be responding to you offline. And with that, I'm going to hand it back to Kelsey. Ms. Kelsey.
Thank you, Mark. And I just have a few housekeeping notes to go over before we officially close out. If you could please fill out the short evaluation form that will appear on the webinar console shortly. This will help us better serve your needs in future webinars. And as a reminder, the on-demand materials will be emailed to everyone within 2 business days. And this will include a PDF of the slides as well as the link to the recording of today's presentation. And thank you again to Laureen, Pete, and Mark for a great presentation today. And thank you to all of our attendees for taking the time out of your busy days to join us. This webinar was brought to you by IOFM and sponsored by apexanalytix. Thank you all and have a great day.